Hi, welcome to the Market Alert for Thursday the 18th of February 2016. So starting off yesterday in the pre-market session, in yesterday's morning's Market Alert I drew in the fib 76% retracement and said if the market took this out we would see prices move higher. Well, that's precisely what we did see in the pre-market session. We'd already had a good move. FOMC day, at the moment they're pumping the market to the upside. And now we see the market moving up. So this is all taking place in the pre-market session. And this is when the 16,268 level was taken out. Now you can see the market goes quiet from around 11 a.m. until midday, and probably a bit more. Depends whether there's economic news at 1:30. So the market goes sideways, but the job already achieved, trading up to those levels. Then we get the start of the afternoon session. See the market opening, coming back. Then we get a buy signal. Market filling this, and as I said before, the long side is the best side at the moment. Just checking the chart to see where the market was trading there. Just pull that back. You can see the next target's in there at 16,460 in the longer term. The market breaks through. We then see the market moving up and trading to the next psychological level there for a profit of 80 plus points. Now the market did continue higher than this, trading all the way through this part of the session. You can see that we had a potential sell signal there, but when you've made money on the upside, and I've warned about selling at the moment because the Fed want the market to move higher, and again you can see how that one failed and the market moved to the upside there. And then it was more or less sideways through until Yellen spoke. And again, I'm just having a look. I can just stop this from flashing. Having a look to see how the market's going on, because the 16,500 level is certainly going to be an interesting level for this market. The Dow having put on 1,000 points since Thursday last week, just a week today. So you see the market there sideways through there, and then you'll see when Yellen speaks, that signal is ignored because Yellen is about to speak. The market really doesn't take much notice of it. Bearing in mind we've already moved 300 points in the pre-market and first part of the session, and the market doesn't really believe her, and who can blame the market? She didn't report on anything new, anything that we already knew, apart from, oh, it's actually a bit worse than I thought it was. So again, they always play catch up, they can't forecast. So now she's changing her tune, and we've got to wait until March really to see what she's going to do with any sort of interest rate decision. She does it every quarter at the moment. So March is D-Day, which is only the next month, of course. So around the 16th, 17th, somewhere around there. I don't know the specific date yet, but I'll let you know when it approaches. But that's when all of the eyes of the world will be on Yellen to see what she's going to do. But don't expect a lot at that point. They'll come up with some excuse to say, well, we haven't got it wrong, but we can see that things have slowed down due to China and the oil price. And, oh yes, and Japan have gone negative on rates, something we're considering if we need to. And we'll print more money as well for the bankers. So watch this space, really. So the market could be free to move higher because of this, but also if we have a look at the daily chart, we've got a very interesting picture now, current picture. You can see on the overnight market there that prices have actually stopped at the 16,500. Let me just bring this down a bit. There you go. So you can see the market stopped at the 16,510, the previous high. We can see the market move lower there. It's whether they want to move lower here. Now we've had a good run from here up to here, so let's just have a look and see what sort of a range we've got from here. I'm going to have to go out to here just to do this. It will still read the same though. So we've got 1,000 points in the Dow. A really good dead cat bounce that we've got going on here. The market, has it moved up any volume yesterday? Absolutely nothing. This is just fresh air. Prices being marked up. No new buying. There's no reason for anybody to buy these markets. This is a helium-filled market now. It was bad enough before when it was pumped up on QE. Now it's sort of levitation on acid. So we've got resistance here. The market's struggling. It'll be interesting to see what it does today, but it wouldn't take a lot to accelerate back to the downside. Like I say, the only issue really is whether Yellen's going to intervene in between, whether she's going to wheel out Dudley, Fisher, all the usual suspects to try and keep the markets moving higher. But at the moment, this market is definitely moving up on fresh air. That is not buying. You can see there's some sort of short covering here coming into the market, but there is no new buying in this latest move. So again, fresh air moving to the upside there. What have we got here today? Anything exciting apart from crude oil inventories? Well, you might as well ignore them, because that market's got a mind of its own at the moment. It's 1 minute it's down, then it's up. Deals being done with Saudi, Russia, and again, it should be down at $10 a barrel, but it's also being manipulated at the moment. All sorts of deals being done to try and hold the market together, and there's a reason for that, which I'll show you in just a minute. What else have we got? Philly Fed forecast, previous minus 3.5, forecast to be minus 2.9. All of these economic numbers have continued to move lower. Again, show you why in a moment. So not a lot of news on that front. I'm just looking at this daily chart again. I'm just considering what we've really got to move the market higher, other than central bank rhetoric. There's not an awful lot that will actually move it higher. So there could be the possibility of some profit taking from this recent move here to actually get a few quid on the short side there. But if it closes above 510, then 510 will become the support if the market comes back to it. So keep that in mind. Difficult one to call at this level, as we're a month away now from an interest rate decision from Yellen. She didn't say a fat lot at all yesterday, as I knew she wouldn't. But yeah, we'll see what happens there. And let's have a look. We haven't seen this for a while. This is the commodity index. This has found a bit of support. Commodities prices bottoming out, but of course, that's, let's say, with crude oil doing its wonders at the moment of finding support at around the $31 per barrel. The Baltic Dry Index is back above 300 as well. So an interesting picture there at the moment. So there is some goods being shipped, but then again, how much lower could it go, having come off 1200 in August 14? So again, some sort of support in that market, but not technical support, but real support. So there is some goods being shipped, having seen a massive decline over the last 18 months. And what else have we got? Let's just have a quick look at the implied. This is dropping nicely, 19.16, coming back below the 20% level there. That's good news as well. So we want to see that continue low, and we've got to have this pull back in order for the market to drop in the background. And I think March is going to be a really exciting time to the downside, as well as this starting to show here as well. And then finally, just to back up all the other bits and pieces, on Zero Hedge yesterday, 21 new numbers that show that the global economy is absolutely imploding. And there's absolutely no doubts about it when you read these figures. Chinese exports fell 11.2% year over year in January. The imports were even worse in January. Over a year-to-year basis, declining a whopping 18.8%. It may be hard to believe, but Chinese imports have now plunged for 15 months in a row. India's were down. See, this is the thing the other week. I don't know whether I covered it in the market alerts, but the BBC were trotting out this nonsense about, and they got somebody in from an asset management company saying that India was the next big market. Well, not according to this, it's not. India exports were down 13.6. They were hoping that India was going to save the financial world, as China did in 2008 when they started adopting the Western philosophy of a debt-based economy, which is doomed to failure in the end, because you have to keep buying rubbish and then paying it off, taking it to the tip, and doing the same madness all the time just to keep the economy going. In Japan, exports declined 8%, a year-on-year 18% drop. The sixth time in 6 years Japanese GDP growth has gone negative, along with their interest rates. In the United States, exports were down 7%. US factory orders are falling for 14 months in a row. Without factory orders, there's no economy, because it's service-led, and we know what happens in the end with that. Restaurant Performance Index in the United States has dropped to the lowest level since 2008. The Baltic Dry Index below 300, which we just looked at, which is just slightly back above It's now cheaper to rent an 1100-foot merchant vessel than to rent a Ferrari. So we know we're at the top of the old credit cycle again. And also yesterday's front page, good old Richard Desmond of the Daily Express, house prices increased by £18,000 this year. By Jove, don't we all feel better for that? Again, another load of nonsense. Typical propaganda at the top of a credit cycle and debt cycle. Orders for Class 8 trucks in the United States dropped 48%. 1,250 workers are laid off at Daimler in the US. This has not been reported in the mainstream. Even though Saudi and Russia have agreed a freeze on oil production at current levels, the price of US oil has fallen $30, below $30 a barrel. It's just slightly up against that yesterday. It's being reported that 35% of oil and gas companies around the world have a risk of falling into bankruptcy. Now, this is a very important one because this is not just a few billion. This is hundreds of billions of dollars. And this is what the Dallas Fed have been doing behind the scenes, telling the banks not to market any debt and to get the oil companies that are into fracking and everything else to try and sell some of the assets to service their debts. That's an ongoing debate and dispute between Tyler Durden of Zero Hedge and the Dallas Fed at the moment. According to CNN, 67 oil and gas companies in the United States filed for bankruptcy during 2015. These are the smaller ones. The big ones have funding from the likes of JP Morgan and Deutsche Bank, funny enough. The number of job cuts in the United States rocketed 218%. So much for Yellen's jobs figures and strong labour market that she kept going on about during September, which was a reason and sole reason for increasing interest rates in December, the strong labour market. So she needs to go and check the figures because there's an increase of cuts of 218%. And during the month of January, that is alone. So again, you can see there's a problem there. She didn't see that one coming, did she? The number of job cuts in the United States rocketed 218% during the month of January. Hey-ho. Right, all over America, retail stores are shutting down at a stunning pace, and you can read through the list there. It's absolutely staggering when you see the likes of Walmart, which is the equivalent of Aldi or Lidl in the UK, closing 269 stores, including 154 outside of the United States. Of course, that's Asda. Kmart, more than 24 stores over the next several months. JCPenney, more than 47 stores. Macy's, 36 stores, approximately 2,500 job losses. That'll help Yellen's strong labour market to reduce rates. The Gap is in the process of closing 175. It just goes on. The price of gold is enjoying its best quarterly performance in 30 years, and that's very simple, actually. And in fact, there was a first yesterday, and that even though the stock market moved up 400 points, gold moved with it, which we haven't seen since they started printing money in 2008, except they're not printing money at the moment. They are hoping to print some, no doubt, to try and keep the Ponzi scheme alive. But gold actually went up with the stock market yesterday, which is interesting, until Yellen spoke, and then it pulled back a bit, and I haven't seen the price since. But I thought that was very interesting during yesterday's session. The reason for this is a lack of confidence in central bankers, because they've all become clueless, don't know what to do next. If they did, they would have already done it and they would have solved the problem. So this grand experiment of printing money is slightly foxing them a bit. They don't know what to do apart from go negative on rates, which is not a good idea either, because they're going to find it very difficult for people to take the bonds off them and then pay them for the privilege of having taken them off them. So that will be an interesting one if they go in that direction as well. So gold up, and also last week you will have seen in the market alert, I think it was this time last week, people queuing in London at the bullion dealers, bankers and banks queuing at the bullion dealers buying gold, because people are losing confidence in central bankers. That's the reason behind it. China bought another 210 tons of gold last month as well. And if China ever decide to reset the price of gold, then it's going to be the trade of a lifetime as well, because he who owns the gold can set the price. And I know they've accumulated around 10,000 tons. That's unofficially. I mean, blimey, they won't even say what they've got officially during the last few years. So it will be very interesting to see. So I'm not surprised that gold is holding its own, and also silver at this time, and that is again a very good clue that the market is losing confidence in the central bankers. What else have we got? Unfortunately for global central banks, they are pretty much out of ammunition. I've not actually read that one, believe it or not. I only got down as far as the retailers and then started recording. So here you go. We've got a situation here where what I've just said. So they've purchased a staggering $12.3 trillion worth of assets since 2008. That's a blinding thing, that is, isn't it? And if you don't know, the Fed only release minutes every 5 years, and they are not audited either. So I would say there's a bit of a problem on the global front, according to this. So anybody who says otherwise, just point them in the direction of here, and they will be able to see exactly what it is. I suggest that they do this with Obama, as in his union address last month said that anybody that didn't believe that the US economy was booming was peddling fiction. So all of these figures are just fiction, and according to the powers that be. Right, that's it for this morning. Bit of a long one, but I thought I'd give you a backdrop of what's actually going on in the markets as well, and why the dead cat bounce is probably short-lived that we see in the daily chart there. But of course, being supported by the plunge protection team as well at the moment. Easy to do when you don't get audited for how much you're actually spending and indebting the US taxpayer. Right, that's it. I will see you in tomorrow's alert. Have a good day. As ever, thank you for your support, also for watching. See you in the next one.